Hello everyone, this is Riya Singh, the currency analyst for Nirmal Bang. After a higher opening, the Indian currency slumped to a record low despite the positive equity market, but recovered in the closing session ahead of the long weekend. On Thursday, rupee opened at 76.49 a dollar and touched a low of 76.33, but rebounded to close higher by 14 paise at 76.63. The performance of dollar on the global front has seen a bit of a cool down with the plunge in the dollar index from high of 102.99 to 99.44. The Fed slicing the rate to zero and the infusion of tremendous quantitative easing has brought down the US dollar funding cost, thus restricting the strengthening of dollar from what it should be amid such risky and crisis situation. The FIIs were buyers in the capital market segment, buying shares worth of rupees 17.37.62 crores on 9th April. The RBI has stepped up to put no restriction on the FPI holding of the government securities through fully accessible route, which might help this further and aid in curbing the FII outflows, who have been a deep seller of domestic market amid the COVID-19 pandemic. There had been a rising spread between the government security yields and the repo rate, indicating the concern of fiscal slippage. Thus, the slippage in borrowing costs might not be as much as expected, but there would be a concern with the transmission of the rate as well, which could lead to liquidity issue, which we are already seeing with the trading time cutoff. The oil prices has reversed from its early losses after the production cut decision taken by the OPEC. On Sunday, the OPEC and its allies came to finalize a production cut of 9.7 million barrels per year, which can further spike the oil prices, but not by much, as the crude oil price demand has plunged extensively amid the COVID-19 situation, and the production cut that was announced was only 10%. Thus, it will not push the prices as much. Taking into the overall discussed factors, though the RBI have come in to rescue the curbing of the depreciation of the rupee, the confidence in the rupee is not seen much, with the NDF trading at quite high from the OTC market. Every dip was taken as an opportunity to buy amid the rising COVID-19 escalation risk and fiscal slippage concern, and thus there wasn't any depth in the appreciation move that has happened so far. Thus, we maintain the view that the strategy to follow will be in rupee is buying in dips for the target of 77 to 77.25 in the coming session. Thank you. Please stay home and stay safe.